Bitcoin and other cryptocurrency have seen more than $2 trillion wiped from the combined crypto market capitalization in just 6 months due to a devastating crypto crash that some fear could just be getting started. This has made critics line up to label it a Ponzi scheme. The thinking is that Bitcoin doesn't actually do anything, so the only way its value can go up is if people buy more of it and push the price up. But does that make it a Ponzi scheme? Let's dive in and find out in this video. You are welcome to the Blockchain College, your go-to YouTube channel where you learn more about blockchain technology, NFTs, the future of finance, DeFi, metaverse, and lots more. But before we proceed, remember to like and share this video. If you're watching this channel for the first time, kindly subscribe and click on the bell icon for notifications on more interesting new videos. What is a Ponzi scheme? A Ponzi scheme is an investment scam that uses funds from new investors to pay high rewards to the existing ones. Unlike a real investment, the fraudster doesn't actually invest money or do anything to generate revenue. Let's say you were an early entrant into a Ponzi scheme and put in $500 with a promise of gaining a 20% APY. The scammer would use your $500 to pay the interest on other people's so-called investments. He or she would then need to convince more people to put in more money and use that to pay you. But eventually there wouldn't be enough new money coming in, the scam would unravel, and your $500 would have disappeared. The most famous crypto Ponzi scheme is probably OneCoin, a supposed cryptocurrency that didn't even have a blockchain behind it. The swindlers tricked investors around the world out of over $4 billion. Ruja Ignatova, the main figure behind OneCoin, disappeared and has never been caught till date. Why Bitcoin is not a Ponzi scheme? Decentralization. Decentralization is one of the reasons why Bitcoin cannot be regarded as a Ponzi scheme. As Bitcoin is an entirely decentralized asset and operates using the transparency of blockchain technology, Bitcoin cannot be a Ponzi scheme. Due to the nature of blockchain, anyone at any time can verify all transactions made on the Bitcoin network, dissimilar to a Ponzi scheme where investments are shrouded in secrecy. Ponzi schemes need to conceal transactions from both investors and regulators in order for the scam to work, which is the exact opposite of how blockchain functions. These alone prove that Bitcoin cannot be a Ponzi scheme. Bitcoin volatility confirms it is not a Ponzi scheme. Not often seen in a positive light, Bitcoin's market volatility puts the final nail in the coffin when considering whether Bitcoin is a Ponzi scheme. C. In Ponzi schemes, investors receive suspiciously consistent returns, which is just not plausible when it comes to trading Bitcoin. Day traders have been known to witness high price swings over short periods of time, sometimes losing or accumulating a large amount in mere hours. This is entirely unrealistic when it comes to the functioning of a Ponzi scheme. Instead, Bitcoin's price history has shown that substantial growth is generally witnessed in 4-year periods. This is in line with the Bitcoin halving event, an automated change to the miner's rewards which manages the number of new coins entering circulation. After every 210,000 blocks are added to the network's blockchain, the halving event is initiated, and the rewards are automatically halved. History has shown that roughly 12 to 18 months later Bitcoin has seen substantial gains. The next halving to take place will be in 2024. How to avoid Ponzi schemes in the crypto space. While Bitcoin and other cryptocurrencies are not Ponzi schemes themselves, that doesn't mean that Ponzi schemes cannot use Bitcoin to lure in potential investors. Beware of any investment firms looking to invest in crypto for you, particularly if they're claiming to provide inflated rates of returns. Instead, invest in crypto yourself through a reputable platform like Binance and take matters into your own hands. Buying cryptocurrency is simple. You can do so with a credit card or bank transfer, and then the funds are stored in the digital wallets allocated to you specifically. From the mobile app, you have full control over your funds, able to sell or buy at a moment's notice. Stay clear of Ponzi schemes and other investment scams, and utilize the financially inclusive world of crypto investments yourself. In a nutshell, cryptocurrency is not a Ponzi. Bitcoin is not a Ponzi. Thanks for watching. Do you have any questions? Let us know via the comments section. Kindly like and share this video. To stay up to date with our latest videos, make sure to subscribe to this YouTube channel by clicking the subscribe button.